Good morning and welcome to Trading the Trend on Wednesday, the 18th of January. On the 4th of January, we went long the Australian dollar versus the US dollar, and we did so at 68.75. And this trade has worked out quite well so far. And we have now risen above the psychological 70 area and are heading towards the August high at 71.36 and also our upside target at 72.40. So what we can do now is raise our stop loss level from 66.85 to our entry level at 68.75, making this a free trade. Last week, we went along we wanted to go along the euro versus US dollar on a small retracement. We've seen a retracement, but it hasn't come back down to our entry level just yet. So we didn't want to add up on our short US dollar positions, basically, by going long euro dollar in addition of being long the Australian dollar versus US dollar. So this trade we didn't enter. And this week's Trading the Trend is to go long nickel. And as you can see here on the weekly chart, we had a series of higher highs and higher lows since July of last year on this chart. And we also bounced off the 55-week simple moving average, which is here in orange, and which capped the nickel price back in August and September of last year. So this time around, it acts as support. And if we zoomed in onto the daily chart for nickel, you can see that since July, we have risen. And yes, we have seen a correction lower since the December highs, but that looks to me like an ABC correction in an overall uptrend, since we've also bounced off the September high at the beginning of January of this year, and also remain above the red line here, the 200-day simple moving average. So today's Trading the Trend is to go long nickel at $28,080 per metric ton, with a stop loss just below the 200-day simple moving average at 25,635 and an upside target of 33,000.